My top 5 liquidity sweep videos. Is this the liquidity? Or is this liquidity? Liquidity is arguably the most powerful tool in your arsenal, but only if you know how to read the inducement. First, spot the inducement. Focus on the low that swept the initial structural low. Look for the 2 key signals. This break gives you 2 vital pieces of information: change of character, and the true liquidity point. Once the price drops back down to grab that liquidity, you have a high probability long setup ready to go. Try it on your charts today. How to identify a liquidity sweep. Retail traders place their stop-loss orders just above recent highs. Large institutions push the price just above that high to trigger those stop orders. By triggering these stops, they create the necessary liquidity to fill their own massive sell orders. Once they have enough orders filled, the market instantly reverses in the opposite direction. Instead of chasing the breakout, wait for the sweep. Look for the shift in market structure, and then enter the trend. Think of liquidity as fuel. Stop chasing price in the middle of nowhere. When price slows down, it's just looking to refill the tank. We don't guess direction, we wait for the sweep. Once the liquidity is taken, the market is primed. Don't FOMO into the breakout. Be patient. Wait for the pullback into the order block. Place your entry there, keep your stop loss protected below the order block, and let the market do the work. What's a liquidity sweep? Don't enter a trade just because the price hits a support level. That is where retail stop losses are clustered. Wait for the liquidity grab. Retail stop losses are usually hidden just below the recent lows. This move is called a liquidity sweep. This is not an entry signal. Find the zone. After the sweep, look for a change in the state of delivery and identify your zone of interest. Enter on the pullback. Don't FOMO. Wait for the price to pull back into your point of interest and enter with a high risk to reward ratio. Here is my 80% plus win rate model. Identify the liquidity sweep. Watch for a sharp spike below a low or above a high. Retail traders get stopped out here. That's your first sign. Identify the bearish fair value gap and wait for a candle to close above it. This shift turns that gap into an inversion fair value gap, signaling a change in market intent. This is the trigger we're looking for to enter long position and target the nearest buy-side liquidity. Master this setup and you'll stop being the liquidity and start trading with it.